Hi and welcome to the morning report for Monday the 27th of January with me, Richard Perry, market analyst at Hantec Markets. Please don't forget that this video is for informational purposes only and that you have read the disclaimer which is at the bottom of the morning report page on the website. The flight to safety that we'd seen on the back of the Chinese data last week that was so disappointing, and also a bit of concerns about the US continuing down its path to of tapering from the Fed. That has certainly meant a flight to safety, and emerging market currencies and stock markets are all under pressure. The S&P 500, for example, on Friday was down 2%, and that has significantly hit Asian markets early on Monday, and currencies as well. I mean, countries such as Turkey, Argentina, any country that is running a current account deficit or has a current account deficit issue is certainly being hit, and this is meaning a flight to safety. Currencies such as the yen certainly benefiting off the back of that. Gold also continues to push higher. So that's what we're seeing at the moment, and that is also pulling stock markets lower. The European markets have again opened poorly. FTSE's down over 1% in early trading. The DAX is around 0.5% off as well, so still a lot of pressure that these investors are seeing this week, and it's not likely to get all that much better. Obviously, as I said earlier, we've got that FOMC meeting result on Wednesday. The likelihood is for 10 billion further tapering down to 65 billion, but also you've got the GDP numbers. UK is on Tuesday, although that's possibly going to be decent. The main figure that markets will be looking for is the Thursday US GDP Q1 number, so that is certainly going to be on traders' minds all week. So there's a lot of big data out this week that could be driving these markets, and certainly this correction that we're seeing at the moment is pulling indices and certain currencies lower. So the one that I've actually focused on for my chart of the day, though, is this Euro Sterling chart. Now we've had in the last 3 days a big jump back up towards a resistance band around that 83 to 83.40 level. And if you look actually on the daily chart, this is just another instance of where I think it could be another chance to sell. You've got this 21-day moving average, which is the red line we've got here, which consistently has been seen for the minor bounces as a chance to sell. You've got this big downtrend that you've seen Euro Sterling in the past 6 months, and I think this 21-day moving average is again a chance to sell. That currently comes in at 83.33. So I think any sort of move towards there, I think, is a chance to sell. These momentum indicators have just unwound. That RSI is in bearish configuration, and looks to be back towards that 50 point, pretty much bang on at the moment. The MACD, that's fairly negative as well. So with all these moving averages falling, I'd be using this as a chance to sell, and certainly I think today, with the fact that it's back into this resistance band around 8300, and I said 8300 to 8300 to 8340 is a decent resistance band that you need to be looking at. So I think that is a chance to sell. Thank you very much for listening, and don't forget to check out the other morning report charts on our website for euro, dollar, cable, dollar, yen and gold. And thank you very much, and I will speak to you soon. Good luck with your trading.